Hi, welcome to the April 2026 edition of The Student of the Market. At TSG Retirement Solutions, we break down the noise and provide a clear monthly snapshot of the market so that you can stay informed and focus on what matters most to you. This month, we're covering geopolitical headlines, earnings, election year patterns, international markets, and why diversification matters in 2026. And as always, the goal of these videos is simple: step back, look at the big picture, and make sure that your current investment plan still fits your current and future situations. We'll start here with geopolitical volatility. Geopolitical events often create alarming headlines, but markets have usually been more resilient than people expect. Our chief investment officer, Larry Adam, put it this way: geopolitical sell offs tend to fade, especially when they happen outside the US. And over time, the real driver of equity markets is earnings. The takeaway is not to ignore the risks, it's to avoid reacting emotionally to headlines. For long term investors, especially those nearing or in retirement, the key is making sure your portfolio is built to handle uncertainty because it will show up. This slide gives some helpful perspective. At the end of the first quarter, the market was down about 4% for the year, with a drawdown of about 9% from peak to trough. Historically, when drawdowns have stayed under 15% during a year, the market has often still finished the year positive. That doesn't guarantee anything from here, but it does remind us that pullbacks are normal and not every decline turns into a bad year. This is one of the more interesting charts in the deck. In the first quarter, earnings estimates moved up more than 8%, even while stock returns were down about 4%. This kind of divergence is rare, and it matters because over time, earnings are what drives equity markets. So while sentiment has been cautious, the underlying earnings picture has actually been stronger than many investors may realize. So while sentiment has been cautious, the underlying earnings picture has actually been stronger than many investors may realize. As you know, this year is a midterm election. Historically, those years have often been slower through the first three quarters, followed by a stronger fourth quarter. That doesn't mean the pattern has to repeat itself this year, but it does help explain why the markets can feel uneven during election years. Political headlines create noise, but long term investment decisions should still be grounded in discipline. The market leadership has been more selective this year. This has not been a year where everything is working all at once. Instead, alternatives and commodities have really helped support performance this year. That's another reminder that diversification matters when the returns are uneven through different asset classes. International stocks are leading in 2026. They've outperformed US stocks year to date. Historically, when US stocks are lower, international stocks have often had a better chance of leading. That's why diversification is not just about owning more of what's doing well, it's about owning assets that can lead to different outcomes. After a long stretch of US leadership, global diversification may once again be adding value. This slide lines up closely with how we think about portfolio construction on our team. Traditional bonds still matter, but the risk and return trade off has changed from what investors were used to during the years of falling interest rates. With traditional bonds up and downside trade offs versus stocks near all time lows. At the same time, some income oriented and alternative strategies have offered a better balance between participation and downside control. For us, that reinforces the value of looking beyond simple stock and bond mix, especially for retirees and those getting close to retirement. As we wrap up April, the message this month is pretty straightforward. Headlines can feel very overwhelming, but that doesn't always mean the bigger picture has changed. We've seen earnings remain resilient, broader market leadership's begun to emerge, and more evidence that diversification is still doing its job. For many investors, this year's volatility has been a reminder of why it helps to have someone looking over your investments and making sure you're positioned appropriately. Now is a great time to pause and ask yourself a simple question. Does my current plan still fit where I am today? If you're nearing retirement, already retired, or just want to make sure your portfolio still lines up with your goals and your comfort for risk, we'd be glad to help you out. Our team is here to help you make thoughtful decisions with confidence. Thanks for watching, and we'll talk again next month in May.